You enter the amounts taken as dividend on the key figures worksheet as well. And this worksheet shows you an estimate of the cumulative corporation tax, £82 at the end of April, £269 to date at the end of May. This is only an estimate. It may be higher or lower, the actual corporation tax, depending on the adjustments we have to make to your accounting profit, but at least it gives you an idea as to how much your corporation tax is likely to be. Cumulative dividend available, we estimate 70% of the current year's profit will be available, so 70% of 329 plus whatever retained profits brought forward, or less any retained loss brought forward. So Mr. and Mrs. Smith decide to take a dividend of £400 between them. That's going to be £4 per share because they have 100 shares. They decide that the date of the board meeting is 30th of April and they're actually going to pay it on the 30th of April. And in reality, these two dates will probably be the same. That means we show down here how much they've taken to date, £400 to date, and therefore they've got a remaining dividend of £80. So it's the 480 available less the 400 they've taken, and that also reduces down the amount of profit that's available cumulatively at the end of May. Now there's some housekeeping to be done. They need to do a dividend minute, and the minute they'll put the business name there, so John Smith Limited, the address they held the meeting, and that will be the physical office that they, or the physical address that they held the meeting. Normally the registered office, it may be their home address or an office, external office if they have one. The only the stipulation is not the registered office if that's a virtual office. And then the day they held it, so 30th of April, if that was a Friday, that would be Friday or Thursday, 30th of April 2015, and then we just suggest you put at 1400 hours, but you can put 900 hours or whatever time that you think is relevant. Present is the chairman and director, so that would be Mr. John Smith, and that would normally be the major shareholder or the director. Present would be the secretary as well, if there is a secretary. Some companies only have one director who is also the secretary, in which case you would delete that out. Down here, it was resolved that an interim dividend of, it's going to be £4 per ordinary share because there's 100 shares, they've declared a dividend of £400. So £4 per ordinary share of £1 each. If that's different, if it's not a pound each, then you put the relevant share capital for you per share. The financial year ended, we're doing here 31st of March 2016, so that would be 31st of March 2016. To be paid on the 30th of April 2015, and to people who had shares as at the end of 30th of April 2015. Any other business, and there being no further business meeting was closed, and then you just put in there the name of the chairman, so again Mr. John Smith. You can either print that for your records or you can put a date in there and PDF it and keep it for your records. You've then got the tax voucher. So again, we want to put John Smith Limited, the address, the registered office address this will be, the registered office number which is held on Company's House, then the shareholder name, so the first one would be John Smith and his home address. Again, ordinary shares of £1 each. If your shares aren't £1 each, then you need to change that. Interim dividend for the financial year ended 31st of March 2016 because that's the period we're looking at. Paid on the 30th of April 2015 in respect of holdings as at 30th of April 2015. You put the shareholding in here, so Mr. Smith has 50 shares, you'd make that 50. The rate of dividend per share, remembering it's a £400 dividend, 100 shares, so the rate of dividend per share is £4. You need to be a little bit careful with the tax credit and dividend payable. So the dividend payable for Mr. Smith is £200, but that counts as 90% of the dividend. So £200 divided by 0.9 and then times by 1 because we want to make it up to 100%. So £400 divided by 0.9 times by 1 is £444.44. So that's how you calculate the dividend payable. So that's £444.44. And the tax credit is the difference between that dividend payable and the amount that we're actually putting in the account. So £444.44 less £400. And remembering, so the tax credit is £44.44, remembering that Mr. Smith only holds half of that, so his dividend payable will be £222.22 and the tax credit will be £22.22. And then coming down here, you want the director name, which is John Smith, and he'll need to do a tax voucher for every shareholder. So the only slightly complicated bit here is working out the tax credit and the dividend payable.